While everyone's watching the price in the stock market, a silent crash has been happening in the real economy behind the scenes that no one's been paying attention to. I have the data to show you today. It's going to be a little bit of a different stream because, as I always say, crypto altcoins follow Bitcoin. Bitcoin follows the overall stock market, and they're all at the mercy of liquidity and what's going on in the broader economic and the broader global economy. So we have to pay attention to a lot of different things when we're trying to get an understanding of what's really going on, because we're having signals flashing in both auto loans, credit, and private credit, as well as housing. All four pillars are starting to flash in a very red light, and I wanted to share it with you because it's about more than just crypto on this channel. We're about the long view, and in order to know where you're going, you got to know where you're at. So if we're going to have a real honest outlook of what things are going to be today, tomorrow, next week, a year from now, 5 years from now, 10 years from now, we need to understand what's happening in the market. And I know this isn't the normal kind of video you guys are used to seeing, or the normal kind of live stream you're used to seeing, but this one is highly important. I'm just going to leave it at that. Take it what you will, because I have the data for you. And we're going to start, keep the chat rolling. We're going to do our live Q&A at the end. I'm going to come back to that screen here in a minute, but we do have more. So the share of US subprime borrowers, this is for United States car loans, okay? The share of US subprime borrowers in the last 60 days have risen to 6.9% in January, the highest level on record since the early 1990s, since 1994. So when people start struggling with money, what's the first thing they stop paying? Is it their car loan? No. It's usually the first thing they stop paying is their credit cards. Okay, Fitch Ratings Asset Performance Outlook on North America Structured Financial Sectors. We're not going to look at that. I want to look at credit cards. How much credit card debt do Americans have? Americans' total credit card balance of 1.27 trillion as the fourth quarter of 2025, according to the latest consumer data from Federal Reserve Bank of New York. That's up from 1.23 trillion in quarter three of 2025 and is the highest balance since before the Fed began in 1999. It isn't unusual for credit card debt to rise in Q4. The last time we saw a credit card debt rise in Q4 was in 2010 in the wake of the Great Recession. With this quarter's increase, credit card balances have risen 507 billion since Q1 of 2021, when credit card debt bottomed out at 770 billion during the pandemic. It's a 66% increase in 5 years. American credit card debt is 350 billion higher than pre-pandemic in 2019. Balances stood at 927 billion. That's a 38% increase. However, thanks to still sky-high interest rates and stubborn inflation and a myriad of other economic factors, credit card balances are likely to continue to climb. These record balances are light years above the 478 billion seen more than 20 years ago in Q1 of 1999. And you can see the outstanding credit card balance rising. So people have all-time credit cards. What about delinquencies on credit cards? Let's see about that. Delinquency rates climbing in 2025 on both consumer credit segments, both across student loans and credit cards. Auto loans rose to high records. So we have record highs in auto loans since the 90s, record highs in credit card debt since the 90s, record high in credit card delinquency, auto loan delinquency, and student loan delinquency. So what do people stop paying first when they're short money? They stop paying their credit cards. What's the second thing they stop paying? We'll roll in student loans into credit cards. Usually they stop paying the student loans first. So it's first the student loans, then credit cards. What's the next thing they stop paying? Their car loan. Once they can't pay their credit cards and once they can't pay their car, the only thing left is housing. Housing is the most unaffordable it's been in ever, since before 2008. And now We have the lowest amount of home sales, pending home sales on record ever here in 2026. So housing rates are at their most expensive. Housing sales are at their all-time lowest. People have the most amount of credit card debt they've ever had. They can't pay their credit cards, their student loans, or their car payments. That's what we're looking at right now in the world, in our country. That's what our real economy is looking like. Forget the stock market for a second. Let's look in the mirror at our neighbors and what's going on. Why is this all important? Because, well, where does this money come from, people? Where does this credit come from? Well, it comes from private credit. So when we're talking about private credit, we were just talking the other day, we have private credit companies rolling over now. When people can't pay their credit cards and people can't pay their loans, the people who gave them the loans start rolling over. Blue Owl was the first. I've been talking about creaking in private credit for the last 6 months. We're starting to see it. So private credit cracking now under the pressure of what's happening with the overall personal economy for people, right? So we can say inflation's going down. That's cool. We can say people are making increased wages. That's cool. But what does the real data say? Well, the real data says people are in more debt than ever before. Housing's more unaffordable than ever before. And people can't afford to pay their bills at alarming record rates. So when we're looking at that and we're pulling up, I mean, these are sources, guys. I'll try to put these in the description for you, but I mean, these are trading economics. Like, this is legit data. I'll try to put the sources in the description for you, not trying to scare you. So the real question is, are we at the end of this, or are we at the beginning of this? Because usually the markets are ahead of us as far as before we catch it. Is that why we've been having such a big pull down? I don't know. But when we look in 2008, the last historical figure that we can look at as far as what happens during this kind of thing, the safe play, or not the safe play, I actually did some research and I was wondering what won, what did well in 2008 when we were having all these problems. What did well? What can I look at for a signal? What do you think the best thing was? It was U.S. Treasuries. Look at this volume spike on U.S. Treasuries this morning when Bitcoin dropped. You see this? I can't make this up. Okay? That scared the crap out of me. Won't lie. I immediately bought Treasuries when I saw that volume spike. I immediately bought Treasuries when I saw that. So someone knows something. I mean, look at this volume spike. Okay. So maybe I'm crazy, right? Maybe we just had weak volume before. I'm not seeing it. Now, if I take this candle off of the screen, if I take this volume candle off of the screen here, look what happens. Bloop. This is the normal volume in Treasuries, folks. This is the normal volume in Treasuries, okay? If we scroll over, wait till I get to this candle and see what happens to all this. Goodbye. So we literally 20x'd the normal volume on Treasuries this morning. That's not normal, folks. Something is happening. What it is, I don't know. Are we going to have a crash? I don't know. But that kind of volume on Treasuries is redonkulous. Look at this. Look at this spike. And then as soon as I take it off the screen and it normalizes everything else so it doesn't have to compare it to this, goodbye. Look at the volume. So that means this volume is easily like a 20x over what is normal in US Treasuries. And it coordinates directly with Bitcoin dropping and the rest of the market dropping this morning, because when we go back and look during 2008, if we do have a major event like we had in 2008, looking at this data that we just covered, everyone ran to treasuries because the dollar strengthened. Everything sold. Gold sold. Silver sold. Stocks sold. Everything sold at the very, very beginning. The only thing that came out ahead was U.S. treasuries and then commodities after the original sell-off, looking back to 2008. So what does this mean for crypto? What does this mean for XRP as we move forward? Well, again, my thesis is for the long view, 5 years from now, 10 years from now. What this means for crypto is if this continues, I mean, everything will sell off. Bitcoin will sell off. I mean, will it go to zero? Probably not. But Bitcoin will sell off. Everything will start to sell off. And then the speculative assets, the altcoins, will follow. Now, if altcoins follow, how low will they go? How low will Bitcoin go? I'm still thinking 55K for Bitcoin and $1 for XRP. My opinion has not changed on that as the low points. You can see we pulled all the way down to $1.36 on XRP during this morning's fall off. We had a huge liquidation event early this morning with Bitcoin. That's what the bulk of this stuff was. So yeah, it's looking, I'm not trying to scare people, be doom and gloom, but I got to present all of the information. Now, funny story though, CC's up 5% for the month, while everything else is getting destroyed for my fellow Canton holders. But again, we're here for Canton Network, XRP, HBAR, Chainlink, and Ondo. Those are my 5 core pillars. I also hold gold, silver, copper, real estate, and now U.S. treasuries after this morning. Yeah, I bought a large chunk of treasuries after this morning. We covered some of this stuff on here, but that's the gist of it. Those are the 4 pillars of the economy, okay? It's auto loans, it's credit, private credit, the people who lend the credit, and mortgages. Okay, those are the 4 key indicators. Okay, 3 of them are in the dumps with a 4th one not looking good. Okay, not to mention we did have the tariff drama over the weekend as well. That's not helping the cause. We talked on Friday morning or Saturday morning. I can't remember which one now. One of those mornings we talked when we did the tariffs, when they were announced that they were overruled. And while we were streaming, they were announced he was coming out with a 10% tariff. That was Friday. I remember now. And then Saturday, he came out and said, I'm going to up it to 15.
Secretary, I want to get your take on the impact of the Supreme Court's decision. While much of the discussion over the Supreme Court's decision to rule against the president's emergency tariffs, or some of the tariffs, it's been focused on the impact on foreign allies and the president's power. But it's worth noting that this ruling will also have a profound impact on America's fiscal position. The Committee for a Responsible Budget, President Maya McGuinness told me that the Supreme Court ruling will cut government revenue by $1.9 trillion through fiscal 2036. It will increase debt by $2.4 trillion over the same period. Debt could now rise to 125% of GDP, with deficits rising to more than 7% of GDP. It's worth noting this SCOTUS impact on U.S. debt. Do you believe that the president's actions to come up with tariffs under a different authority will, in fact, replace all of the revenue lost from this ruling?
Yeah, so Maria, let's take a step back here. And Maya McGuinness should be ashamed, and they should take the word responsible out of her organization's name. Everything she told you was completely irresponsible. And look, where were they when the Biden administration blew out the deficit, that we had a fiscal contraction last year? So she should be ashamed. So let me tell you what's going to happen. First, this ruling was a very narrow ruling in terms of the president's ability to use IEPA to collect revenues. The Supreme Court said the president can put in a full embargo, but he cannot collect $1. So the president still has the most draconian measure for negotiations, and that under Sections 232, Sections 301, we're already collecting substantial tariff revenue. The IEPA tariffs are going to be replaced in 3 days with the Section 122, and I can tell you at Treasury, contrary to what the Committee for an Irresponsible Budget, or whatever it's called, says, tariff revenue will be unchanged this year and will be unchanged in the future.
Yeah, no, I mean, just to be clear, she's saying the fact that the SCOTUS ruled against the president's emergency tariffs will be problematic for the U.S.'s fiscal policy.
No. Again, that is wrong.
Okay.
Treasury projections show 2026 revenues are from tariffs unchanged, and all the out years unchanged. What is going to happen, the president announced on Friday and then amended over the weekend, 15% global tariff using a very robust authority from 1974. Those will be layered on with Section 232, Section 301, and the 122s. They run for 150 days, and during that time, Commerce USTR will be doing studies, and the studies will likely lead to increased tariff revenues. We've been in contact with our foreign trading partners, and they like the tariff deals, so they're not going to be changed.
Tariffs will continue regardless of what the Supreme Court has to say. They're just going to implement them a different way. Breaking news, Stellar XLM goes live on Axelar. Cross-chain expansion is finally unlocked. Excuse me. The total crypto market just lost another 120 billion, and CC actually gained 3% during that time period. Everyone else said real utility would thrive in the end, and it looks like it is. 1 million filled in 72 hours. New RLUSD vaults are live. This is for Soil. Don't forget the Xammon vault or the Doppler Finance vault through Xammon filled up on the RLUSD in 24 hours. So everyone wants to stake the RLUSD. Now, again, you can't stake XRP through Soil, but you can stake your XRP through Doppler Finance with one-click DeFi on Xammon. And don't worry, I'm not a Xammon partner, but I'm just really excited about one-click DeFi for XRP. Only 5 days of net outflows over a 3-month launch period. Most of that was with Grayscale. So that's kind of an overall on what the ETFs have been doing in their existence. Now, remember, it was like the first 75 days, we didn't have any outflows. So take it with a pinch of salt that most of those outflows happened in the last 30 days. XRP Ledger DEX volume is already up 385% in the last 24 hours. CEO says blockchain is better than the current banking system. Reveals bank moves 16 trillion in 1 day. I'm not going to play this. This is old. Here, 12.7% of credit card loans are now in serious delinquency over 90 plus days, the second highest in history. The only other time the percent was higher was during the aftermath of the global financial crisis after 2008. New odds on the Clarity Act signing dropped 30% in 24 hours. And Trump announced $2,000 tariff dividend without congressional approval. Let's see what he actually had to say.
With Kevin Hassett on that, or do you think you can do that unilaterally?
I don't think we would have to go the Congress route, but we'll find out. The reason we're even talking about it is that we have so much money coming in from tariffs that we'll be able to issue at least a $2,000 dividend and also pay down debt for the country. But we'd do a $2,000 dividend to the people of our country. Would probably set a limit of income limit where it made sense, but. We will be able to make a very substantial dividend to the people of our country. I believe we can do that without Congress.
Last night on Truth Social.
I believe we can do that without Congress, he says. We'll see if that actually happens. That's one of those wait and see things. I'll believe it if I see it. This was interesting, though. XRP added to Arizona's digital reserve bill after a 4-2 committee. Arizona state legislature advanced a bill that adds XRP as an eligible asset in the proposed Digital Asset Strategic Reserve Fund for Arizona. So it looks like states are starting to put different crypto assets into a treasury system for their state, and XRP is among those for Arizona that passed. Now, I did a video not too long ago. I saw this, and it made me think, because this is kind of what I was describing when I was talking about how I feel like most people feel when they're investing and when they're going through life. And this is exactly, this was me. This is what I felt like. You have all of these things weighing on. You're just standing there trying to hang the hell on. But I thought it was a pretty good example. Let's hop in the chat. see what everyone's doing, and I'll do a recap for anyone who came in late after I get through some of the chat here for you guys. I appreciate everyone taking their time to be here today, even amidst a scary stream. Hopefully you guys appreciate the realistic info, right? Hopefully you guys appreciate that realistic info and not some BS someone's trying to feed you, you know? Not trying to do that. I want you guys to have the real info. I see that the stream's actually just picking up now. So let me talk to some of the chat, and then I'll go in and I'll just start the whole thing over again for anyone who came in late, and we'll ramp this up again because it's highly important. It really is highly important. And don't worry, I actually have a live Bitcoin trade going right now as well. So don't worry. We still have live Bitcoin trading, but I'm saving that for the end for you all. So I don't even know what it's doing right now. I know it's live. I don't know if it's up, down, stopped out, whatever the case may be going on with it. But let's talk to the chat, you guys here. Let's see. Pull up the chat. We all love the chat. So I asked, are you diversified or are you all in? And guys, keep the chat rolling. The chat is the lifeblood of the stream. Raul was in today. Sir Charles was actually in first, though. And I want a special thanks to my members, guys. Sir Charles, Raul, Todd Madison, anyone who comes in the stream. Quelly's always here today. I appreciate all of you for always taking your time to be here. Raul said hello to Charles. Everyone's in here. Sir Charles said the actual numbers paint a different picture than they tell us on the news. You're absolutely right. And I'll recap all those numbers because there are 4 key pillars that hold up our economy, and 2 of them have been knocked out, and 1 of them is strongly cracking, and the 4th one looks like it's about to bust apart at the seams. Raul says everyone is hurting right now, and ain't that the truth, my friend? Everyone is hurting right now. Quelly said hello to everybody, and that candle was massive. That volume candle is huge. We will go over that again for those who came in late because there's a lot of important data. I got you covered, Quelly. Don't you worry. Aloha, Gunpowder. You're just in time for the recap, and it is an important one. Not a lot of people talking. I'm going to do the recap. Everyone chat. We're going to have a hangout afterwards, so we need to make sure we got the information to cover. So let's see what we're talking about here. Actually, let me pull this off here. I got to get better at navigating all this stuff for you guys here. All right. So when we're talking about debt, I had everything set up here, unfortunately. So here we go. When we're talking about the economy, when we're talking about what's actually happening in our economy, okay? The Bitcoin, crypto altcoins follow Bitcoin, okay? Altcoins follow Bitcoin. Bitcoin follows tech stocks. Tech stocks follow the overall stock market. The overall stock market is reliant on 4 key pillars, right? There's 4 real things that we can gauge to see how the real economy is doing. I'm not talking inflation data. I'm not talking employee data. I'm not talking the government data. I'm talking real numbers of American people and what they are dealing with. And it paints a much different picture than what a lot of people have been led to believe. And it's something I want you to be aware of, okay? Because there's some data that's scary that no one is talking about, okay? The share of U.S. subprime borrowers at least 60 days behind on their auto loans rose to 6.9% in January of 2026, the highest level on record, according to Fitch Ratings data going back to the early 1990s, 1994 to be exact. Why is this data important? So people who are more than 2 months behind on their car loans, if you're struggling with money, right? Let's not even talk about the economy. Let's just look at ourselves. If I'm struggling with money, the very first thing I'm not going to pay, if I have to pay bills, I'm going to pay my utilities, I'm going to pay my house, I'm going to pay my car. So that's not the first thing I'm going to stop paying. The first thing I'm going to stop paying is credit cards. So what's going on with credit cards right now? Americans' total credit card balance is $1.277 trillion as of the 4th quarter of 2025, according to the latest consumer data from the Federal Reserve Bank of New York. That's up from $1.23 trillion at the end of Q3 2025 and is the highest balance since the New York Fed began tracking it in 1999. With this quarter's increase, credit card balances have risen $507 billion since Q1 of 2021, when credit card debt bottomed out at $770 billion during the pandemic. That's a 66% increase in nearly 5 years. American credit card debt is $350 billion higher than when it was pre-pandemic of Q4 2019, when balances stood at $927 billion. That's a 38% increase. However, thanks to still sky-high interest rates, stubborn inflation, and a myriad of other economic factors, credit card balances are likely to only continue to climb. And when we look at, oh, you guys aren't looking at the damn screen, I'm sorry. Well, hopefully I was entertaining as I was reading it. But if you look at this right here, you can see the graph of what we've been dealing with since 99. Obviously, there's inflation and, numerous other factors that go into this. But 12.7% of credit card loans are now in serious delinquency, 90 plus days or more, the second highest in history. The only other time the percent was higher was during the aftermath of the global financial crisis. So, credit card debt, all-time high. Credit cards aren't getting paid. Student loans aren't getting paid. I have that information for you here. Talking about delinquency on student loans and credit card debt and auto loans. So, highest rates of delinquency in auto loans, most amount of debt on credit cards, highest amount of delinquency on credit cards since 2008, or since the 90s, if we're being honest. So, what does that mean? Well, when people can't pay their bills, when people stop paying their credit cards, when people stop paying their auto loans, the next thing on that list, if they stop paying their cars, the next thing to go is the mortgage. They're not skipping the mortgage just yet. That hasn't happened. But we are starting to see it impacted in private credit, right? We covered this the other day. Blue Owl Capital announced that it has permanently halted redemptions for Blue Owl Capital Corp. It's $1.7 billion private credit fund aimed at retail investors, and this is no small thing. So Blue Owl's rolling over. Private credit. So when people can't pay their credit cards, when people can't pay their auto loans, when people can't pay their debts, private credit starts to get hit first. Well, what's the next thing that can sweep all this out? Well, that's going to be housing. Well, when it comes to housing, pending home sales have fallen to their absolute lowest ever as far as homes available for sale right now. And homes are the most unaffordable than they've ever been, even before 2008. I don't have the thing pulled up here, but I had it in a previous video. I can find it if I want to. I probably should. Home affordability. Let me just search my bookmarks for home affordability. I know it's there, but I want to show it. Home affordability. Let me just do home or housing. Pending home deals. That's pending. Let's see housing. Housing. Do I have it? Here it is. Housing affordability at the highest it's ever been as well. So people aren't selling their houses. People can't buy their houses. They can't pay their credit card debt. They can't pay their car loans. And public or private credit's starting to go under. If this starts to rotate to where people aren't paying their housing anymore, we're looking at 2008 all over again, and maybe worse, because leverage is that much higher. So it's something I have to look for. Now, okay, so let's say I'm right, and it's all doom and gloom, and the worst is going to happen, right? Let's say I'm right, and that happens. Well, I did some research. I looked. I'm like, okay, if this is shaping up to be like 2008, if that's what the data is telling me, what happened in 2008? What happened to the stock market? What won? What went down? What failed? What got crushed? So I was looking. There was only one thing that came out ahead during the 2008 crash. Any guesses on what that might be? It was U.S. Treasuries. U.S. Treasuries were the one thing that came out ahead. And this morning, when I found that out, they printed the largest volume candle on U.S. Treasuries that I have ever seen in my entire life. If you look at the volume of this candle compared to normal volume on US Treasuries, this is the IBIT Treasury ETF. If you look at the normal volume versus this volume, and as soon as I bring the volume off the screen, you can see what happens when it normalizes. Okay, this is normal volume over here. This is about 20 times higher than what it normally does at a minimum. Someone knows something. I don't know what they know, but someone knows something. Because a lot of people bought treasuries this morning. Bitcoin's running back up. Probably going to stop me out because I had a short. I think it's going to run back down. Hopefully I don't get stopped out. Let me adjust it because I think it's going to go back down. Micro Bitcoin futures. Did I get stopped out? I got stopped. No, I'm not stopped out. I'm losing, but I'm not stopped out. So I'm down $126 on my short right now. Hopefully it turns around. Guys, get some chat going. I'm going to be back in 1 minute. I'll be right back, but I need you guys to keep the chat going because I'm done. Sorry, guys. It was either run off the screen or I was going to pee my pants. I didn't have many options right there. English, please. Which part do you not understand? Yeshua, I'll do my best to explain it differently. Unless you're referring to gunpowder saying aloha. If there's anyone new in the stream, let me know. Let me know where you're from. So GovT, the one you bought, I've never bought treasuries before. Now, yeah, none of it's not financial. None of it's financial advice. As always, everything in the stream is not financial advice. I am not a financial advisor. I'm just showing you guys the research I do and what I do in my own personal life. But GovT is BlackRock's U.S. Treasuries ETF. That's what I bought. That's the easiest exposure to treasuries for me. And when I saw that going on, I'm like, okay, well, I need to put some cash in safe haven, like just in case, so I don't lose everything. That's why we diversify. You know, I diversify. Oh, you don't understand treasuries. Okay. So I diversify. I hold 5 different cryptos as well as my other dart throws, but I also hold gold, silver, copper, real estate, and now treasuries. Because it's about, I believe in my XRP. I believe in crypto and what it's going to be for the long view. But we also have to be very realistic about what's happening in the economy. Right? So, that's kind of what we're dealing with. You guys keep chat rolling. We're just having the chat hang out now. So bring your questions. I will do my best to answer them. And what does it mean? I answered those questions. So treasuries, and what does it mean? Well, the reason I'm bringing up treasuries is because when we had, I was talking about, if you came in late, I was talking about the issues we're having with credit card delinquency, with auto loan delinquency, with private credit starting to crack, with seeing private credit companies go under. We have the tariff drama that's going on right now. That keeps going back and forth. And remember, markets absolutely hate uncertainty. But the auto loan issue, the auto loan delinquency, the credit card delinquency, and the amount of credit card debt is the highest it's been since the 2008 collapse, actually before, since 1994, since the early 90s. And then we're also seeing private credit companies starting to crack and starting to struggle. We saw Blue Owl, that's starting to roll over, okay? And then on top of that, we saw the housing market, right? Housing unaffordability at an all-time high and pending home sales at an all-time low. The first thing people stop paying on when they're tight on money is their credit cards. The second thing people stop paying on when they're tight on money is their auto loan. The last thing to go is the mortgage, right? The mortgage is the priority. So that'll be the last thing to be paid. We're seeing all-time highs of people not being able to pay their car loan and their credit card loans. And I went on to do more research, and I'll try to put all these links in the description for you. But more research into it said the majority of those people were under 30. So majority of people who haven't been around, been kicked in the teeth enough with the stock market, haven't learned their lesson, are the ones that are getting crushed right now, who took out too much debt. So when we have an issue like this, what happens? It's a risk off rotation, which we've been seeing now for the last several months. People also tie it into the reverse carry trade. It's all about liquidity. It's all about de-risking. It's all about leverage and margin. Okay. So people are deleveraging, they're de-risking, they're rotating out of risk assets. That's why we've seen the pullback in software. That's why we've seen the pullback in some AI stocks that aren't being pumped full of debt. Nvidia. That's why we're seeing the pullback. And now when 2008 happened, there was a sell-off on everything. Nothing was safe. Gold sold off. Silver sold off. Everything sold. Anything with liquidity must go, right? People needed the money. They needed cash. So what happens? The US dollar strengthens. The only thing that won during the 2008 collapse, the global 2008 financial market, the only thing that won was US treasuries, right? Which is basically a loan from the government. So as the dollar strengthens, treasuries strengthen. And as people de-risk and get out of leverage and get out of debt, the dollar strengthens. Less debt, stronger dollar, right? Weaker dollar, more debt. That's usually how it goes, okay? So when I went back and did the research back into 2008, when I went back and did the research back to 2008, because the dollar strengthened, the bonds became more valuable. It's really what it comes down to. It comes down to the strengthening of the dollar versus what's going on in the market. So as people get out of debt, as debt goes down, the dollar strengthens, right? As gold and silver go down, the dollar strengthens. So when people sell off to get out of these assets to get cash, cash is more valuable. Treasuries go up, and cash is more valuable when there's a lot of uncertainty, when things are going down. It strengthens the dollar. So that's why there's a rotation into treasuries during an economic collapse or economic uncertainty, because it's guaranteed yield. Pretty much. I mean, treasuries are guaranteed. It's a certain fixed amount. You know, it's guaranteed by the U.S. government. So as long as the U.S. government doesn't roll over, we're going to be good. And if we look at the treasuries, and the reason I brought this up is because in 2008, 2009, that was the only thing that printed positive. Everything else went down. The only thing that printed positive was U.S. treasuries. And I looked at that, and literally why I looked up that information and did that research, I saw this ETF for treasuries print the biggest candle it's ever seen in its entire freaking life of volume. More people rushed into U.S. treasuries this morning than they have in a month and a half. Like, you can't make this up. So someone knows something. Don't know who, don't know what, but that's what that data is telling me. And I diversified, not financial advice, but that's what I saw. That's why it makes sense in my head. And that's why I did what I did. So hopefully you guys appreciate it. Hopefully you guys get some value from it. Again, not financial advice. Don't buy or do anything just because I am. Just showing you what I'm doing in my life here and sharing it with you. Let's see. Let's go to the chat here. We'll keep the Bitcoin play up here while we continue to chat. Keep chat rolling. We're only at what? 39 minutes. So I still have another 20 minutes with you guys. The Fed just got a 3% inflation print that kills any rate cuts. If the Fed can't cut and consumers can't pay, what breaks first? That's an issue that's called stagflation. And it is a bad, bad, bad thing. We do not want stagflation. Stagflation is bad. That's what happened to Japan before they went into a 30-year shit economy. Was stagflation. It's not good. I mean, it means people are de-risking and de-leveraging when they run the treasuries. That means they are rotating out of risk when they run the treasuries. If 170 billion in collected tariff has to be refunded, is that bullish for gold? If tariffs are overruled, again, I think it's bullish for our entire market. You know, contrary to what a lot of people think, if the tariffs are in fact overruled, which they were, but if they are held up, we'll see what actually happens when all the drama is said and done. But if the tariffs are overruled and we go back to the old way of doing things, that brings certainty back to the markets. The markets love certainty. They hate uncertainty. So if the tariffs are deemed illegal and we go back to the old way of doing things, that is good for the economy. If the tariffs hold up, it is bad for the economy. So as we saw, he went even more aggressive, and that didn't help issues this morning as well, as far as funds dropping or as far as prices dropping today. But again, that's my opinion. I know a lot of people say the contrary to that. I have been called some mean names for my take on that, but that's fine. We'll see what happens when it actually happens. But I know yesterday when they said, oh, tariffs are overruled, stock market shot up. He came out and said, no, never mind, we're going to do this. Stock market went right back down. Okay? Use your brains, guys. Follow the tea leaves. Read the tea leaves. Sir Charles says, I'm still curious about what happens with COMEX and the silver contracts. It probably gets papered over, but something has to give eventually. I mean, you know they're going to paper over it. They're going to do whatever they can to make their profit. Again, it's all about the Benjamins. No one, like when it comes to finance and when it comes to business and when it comes to investing, it comes into all these things. The only thing you can count on is people are going to do what's best for their interest. So if you're investing in something, you need to align yourself with their interests. So if it's something you believe in and you agree with their interest and believing in the interest of that company or that situation, whatever, that asset is, if their interest does well, then your interest does well. So, I mean, that's kind of how we have to look at it, because the one thing you can bank on is that people are going to take care of themselves when it comes to finance. We have a bajillion examples of that. Integrity does not live in the stock market, my friends, unfortunately. Now, does that say you should go and act without integrity? No, but we need to be aware of it. There's no integrity in the stock market. There's no honor in the stock market. It's all about the buck. Green rules, period. So when you're, a lot of times when I look at these questions or when I'm trying to figure something out, I put myself in the limelight of, okay, who's in control and what's best for the people in control? Because that's probably what they're going to do, right? What's best for the people in control? So like when we're looking at XRP, for example, talking about XRP, what's best for Ripple? Is it best for Ripple that XRP goes up in price, or is it best for Ripple that it goes down in price or never does anything? Well, I mean, considering Ripple's the largest holder of XRP, it'd be best for them if it went up in price, right? Makes sense. Easy factual logic is amazing when you actually apply it correctly. We're 45 minutes in-ish. You guys got any other questions, or should we call it? Wasn't a very big stream today. People don't care about the macroeconomic stuff. If I said some major announcement or some kind of major scare factor, people would have clicked on the stream, but one of these days we'll get it out there. Hopefully it continues to grow. What do you guys think, though? You guys done? Everyone quiet now? Quentin Hicks is a new name. Thank you for joining, Quentin. I haven't seen that one. Where are you from? We're just in the chat hangout now, guys. We're down to 20 people in the stream-ish. Covered all the info, covered the recap for everyone who came in late. If you guys got any other final questions, if not, I'll go ahead and call it. If everybody piled into treasuries, shouldn't that crush gold? Maybe gold is pricing in something much bigger. I mean, yeah, as the dollar strengthens, gold and silver weakens. So that would crush gold. I mean, so if you see treasuries go up, then everything goes down typically. I mean, gold goes down, anything that's especially risk assets. Gold probably hasn't taken a hit today. I didn't even really check gold. Let me see. Let's check gold. See, I'm coming back on my trade now. It got a little dicey up here for a second, but I thought it was going to go back down. Gold is, oh yeah, gold's up to 5,300 today. So, I mean, gold will sell off if there's a liquidity crisis, but gold is also a safe haven. So, in essence, when everything else is weakening, when the dollar is strengthening, gold should be going down. So that really doesn't make sense. That's a good point, Charles, but I mean, gold should be going down as the dollar is strengthening. As treasuries are strengthening, but it's chopping. That's an excellent point. It did go down while Bitcoin, or it did go up while Bitcoin went down this morning. So yeah, that's actually moving opposite of the theory and the thesis. But then again, gold and silver are also a hedge against uncertainty, and we got the treasury stuff going on too. So I mean, when you look at the market, I mean, there's so many factors, but nonetheless, there's a lot of red flags right now that don't make me feel good. How about that? With the treasuries, with, you know, the tariffs, with just the overall what's happened over the last 6 months. Like, I don't know. It just doesn't look pretty. Yeshua says, are we going under $1? Again, I don't think so. Again, my opinion, I still believe that if Bitcoin goes down to 55K, which is where I think it will go if it falls, then XRP is going to get to right around $1. I have my buy order in at $1. It has not changed. The only thing that's changed today is I bought a few $1,000s worth of treasuries. That's it. That's what I did in my life. My opinion, not financial advice. That's the only thing that changed for me is I put some cash into treasuries after seeing all this play out this morning. But that's me. But yeah, you were right. I mean, 5250, 5300, 5229. You're right in there, Charles. What a crazy morning. Watching the charts this morning was ridiculous. But no, I mean, if we go under $1, it'd be 80 to 85 cents, but I still think it'll hold at $1. But that's just me. Again, I'm here for what it's going to be 5 years from now, so it's just buying opportunity. But I mean, it's looking ugly right now in the overall economy. Just I wanted to put that out there for you guys because we hear numbers like CPI data, inflation data, job reports, and stuff like that. But when you actually like peel it behind and look behind the curtain, see what everyday Americans are actually struggling with and what everyday Americans are actually doing, and you put yourself in their shoes, you can start to paint the picture. Now, everyone's different. I mean, not everyone's going to react to things the same way. So, I mean, I don't know. But that's just what I'm seeing. I just try to put all the cards on the table for everyone. And Quelly, I see it hasn't... I have two different chats that I can look at, and one of them delays. The one that I can actually pull up the chat delays sometimes on what the other one's actually showing me. There we go. When do you think the market will recover? Asked Quelly. Well, for if it were similar to 2008, which is the closest historical reference we have, it took about 18 months before we didn't bottom out till like 6 to 8 months after things went south, and it took about 18 months for like things to actually start going green again. As far as a recovery goes, so probably somewhere about 18 months or so, between 1 to 2 years before the market actually gets back to a stable basis, if that happens. Again, if that happens. Just what we're paying attention to. History teaches us a lot. I know I love history. Like, I'm originally from Philadelphia, so I mean, number one, I love American history. Just history is amazing. It's truthfully a collection of stories. It's a collection of people who have been there, done that, and then wrote a book on it. And I mean, there's so much information in books and in history that we can really learn from, and we always repeat the same mistakes. Anything you want to do in this world, 30 people who have mastered it have written a book to tell you how to do it, but people don't follow that information. History is absolutely full of repeating patterns. I mean, history, there's a reason why there's a saying called history repeats itself. I mean, there's a reason for it, guys. We have to learn from the past. If you don't learn from the past, you're going to be doomed to make the same mistakes, and we're seeing it unfold, just in my opinion. I mean, this is identical repeat of 2008. You know, this is something different. This isn't research. This is my own personal life. Just to actually add to this, I just thought of it. So I've talked about this in the stream for a while. Who those of you want to call BS, my streamers will tell you. That I sold my house at the end of last month because I was concerned about this. I sold one of my houses. I was concerned about this. And when I was doing that, the lady asked me what kind of titling paperwork it was, because I was doing titling paperwork. She's like, yeah, because you want to get your loan. I said, no, this is a sale. She's like, oh, this is a sale. She's like, I haven't done many of those, which we saw with the pending home sales at the end of January report. I said, really? She's like, yeah, I've been busy though. I said, what have you been doing then? She's like, lots of refis. Lots and lots and lots of refis. I said, really? She's like, oh yeah. She's like, everyone's paying off their debts or trying to. I'm like, interesting. So here's what's going on. Everyone's refinancing their house, okay? If the housing market crashes, people are underwater on their houses now. Like, and we'll be talking like hundreds of thousands of dollars underwater on their houses. So all these people who just struggled with their credit card debt and their, or their auto loan debt, and they refinance and they get all their debt pulled and they're like, yay, we're great. Housing crash, boom. Nope, you're still 200 grand in debt. Sorry. Like that's what happens in 2008. People kept refi, and then they can't afford to pay their mortgage, and then the housing market goes down and people lose half the value of their house, and now they can't pay anything, and they're $200,000 underwater, and they get foreclosed on and file bankruptcy. Right? Cordell Lewis says, Napoleon Bonaparte said history is a bunch of lies agreed upon. Well, history is written by those of the victors, right? History is written by those who are writing the history books. So the victors are the one who write history. And if you really want to go there, I mean, I could really piss some people off if we want to take it down that road, but I'm not going to get into that. I mean, I could really open up a can of worms, but I don't think that's wise to do 2 minutes before the end of a stream if you want to talk about the lies that are written in history. I can go full on conspiracy theory with you guys too. I have that part of me. You think with the amount of research I do that I don't dive down at least 10 rabbit holes a day of stuff that I shouldn't? My ADHD brain goes, ooh, that's interesting. Tell me why the moon is hollow. Let me see if this is BS. I research all kinds of random crap. The moon being hollow one was interesting for a little bit. That lasted about 2 hours one day. But yeah, there's tons of stuff out there. But yeah, I mean, Napoleon Bonaparte did say that, but I mean, history does repeat itself. We can see it throughout the ages of history that it just keeps happening over and over and over again. Even if you wanted to even zoom out even further and look at the scopes of civilizations and the rise and fall of civilizations, it's all in the same arc. It's all in the same cycle. It's usually about 300 to 400 years. Well, we're celebrating our 250th birthday this year as a country, so that's kind of ominous too. Some food for thought. But hopefully you guys enjoyed the video. Hopefully you got some value from it. I will be back tomorrow at noon, as always.